Welcome back to Ideal Money. Now, I just went through the painful process of figuring out if I was going to buy with financing or lease our next new daily driver, and it was eye-opening. So, I want to quickly share with you the step-by-step process to calculate which one makes the most financial sense for you, because one will save you thousands over the other, depending on your situation. Then, I'll go over when it makes more sense to buy or lease. And I have helped over 1 million subscribers buy cars on our other YouTube channel, Ideal Media. And that's all about cars, so I'm pretty much a pro at car buying. And the cheapest new car is the Nissan Versa, with an MSRP of $16,925. So let's go through the financial differences of buying versus leasing, and at the end, I'll share with you which one I went with and why. Now, you can use my exact formula for any car price to see the difference of financing or leasing by using my favorite auto loan calculators and auto leasing calculators, which I'll link to both of them down below. And that way you can play with the numbers and you can get your own breakdown. But for the cheapest brand new car breakdown, we have the finance column over here and the lease column over here. And since lease agreements are usually 36 months, we'll run the numbers and see which one costs less. So the purchase price, well, it's $16,925 if you pay MSRP and you buy it outright using financing. Now, let's say you put down a standard down payment of 10% or $1,692.50. And you'll have roughly a 5% interest rate if you have good credit on a new car. And you're gonna be financing that over 36 months at that rate. Now, your monthly payment will be $456.55 per month. So to predict depreciation, since a lease is usually 36 months, a 3-year-old Versa is worth roughly 85% of what you paid after 3 years. And as you can see by this graph, a 3-year-old Nissan Versa is depreciated 15% from its original value. So that is $2,538.75 less than you bought it for. And you'd be able to sell it for $14,386.25. Now, let's move on to the lease column. Let's say that you put down that same 10% or $1,692.50 as the down payment. Now, for the lease term, it's gonna be 36 months long, which is the same window as how long we kept the financed one for. So your monthly lease payment to use the car is $92.46 per month, which does seem a lot cheaper than financing, right? And then the buyback, which is your option to buy the car once the lease is finished, is gonna be $14,500. Now, which one is going to cost you less in 3 years? Well, if you finance the vehicle, we have to figure out the total amount of money we have invested over the 36 months. And first, you put down the down payment of $1,692.50. Then we made 36 monthly payments of exactly $456.55 for a grand total of $16,435.80. So you add the $1,692.50 down payment for a grand total of $18,128.30. All right, now let's move over to the lease column, and it has the same down payment of $1,692.50. Then you have that $92.46 lease payment over the 36 months, which is only $3,328.56. Plus you have that buyback price of $14,500. And once you add that all up, you have $19,521.06 total. So to buy the car outright with financing over 3 years, it costs us $18,128. Now, instead, if you were to have leased it and then bought it outright at the end, well, after those 36 months, you can see that it would cost $19,521 or almost $1,400 more. But most people, when they lease, they don't buy back the car because they'd rather keep driving brand new cars every 3 years and keep leasing a new one. So let's see how, if you don't buy back the car, the scenario changes financially. So the Nissan Versa that we bought and financed, we have $18,128.30 into it after 3 years. But remember the 15% depreciation, we can now sell it for roughly $14,386.25, costing us $3,742.05 or around $103 per month. Now, if you leased it, you had a $1,692.50 down payment plus the 36 payments of just $92.46 for a grand total of $5,021.06 or almost $140 per month. So in this circumstance where you don't buy the lease, it still makes sense to buy and finance the car over leasing it. It costs about $40 extra per month to lease. Now, there are certain situations where leasing makes way more sense financially, and I want to cover those here. First off, you have lower monthly payments. Lease payments are typically lower than loan payments because you're paying for the depreciation of the car during the lease term, not the entire cost of the vehicle up front. Plus, by leasing, you get a better car. Because lease payments are lower, you might be able to afford to lease a more expensive or luxurious car than you could afford to actually buy. Plus, you get a new car every few years. If you like driving the latest and greatest technologies and safety features, leasing could be a great option because most leases are between 2 and 4 years, after which you can choose to lease a new vehicle. Also, they're under warranty. Lease cars are typically under warranty for the duration of the lease, meaning most repairs will be covered by the warranty and you won't have any out-of-pocket costs. Plus, you have no worries about resale. When your lease ends, you return the car to the dealer. You don't have to worry about selling the car or getting a good trade-in price. And also, tax benefits. If you're using the car for business, there may be tax advantages associated with leasing. However, there are some downsides to consider because first off, you don't own the car. At the end of the lease, you have to return the car unless you choose to buy it, often for a price determined when you start the lease. Also, mileage restrictions. Leases have annual mileage limits. If you drive a lot, the excessive mileage charges may be really steep. Also, you have wear and tear. If the car has damages beyond normal wear and tear, which no one really knows what that is, well, when you return it, you could be charged extra. And also, there are early termination fees. If you need to end the lease early, you may face substantial termination fees. Now, let's cover why you'd want to finance over lease a car. First is the pride of ownership. When you finance a car, it becomes yours once you've paid it off. This allows you to build equity and you can sell it or trade it in at any time. Plus, if you like long road trips, well, there's no mileage restrictions. If you drive it a lot, financing could be a way better option. Unlike leases, there are no penalties for driving excessive miles when you finance a vehicle. Now, also, for my car enthusiasts, freedom to customize. When you own a car, well, you own it, so you can do whatever you want to it. Just don't get hit by the taste police. Customize it however you want. This is typically not allowed with leased vehicles, and if you do it with the leased vehicle, you have to return it back to stock before you return it. Also, there's no wear and tear charges. While you'll want to maintain your car for it to last as long as it can, you don't have to worry about being charged for excessive wear and tear like you might with a lease. Think off-roading in a Jeep Wrangler. Yeah, that's not gonna buff out. Also, long-term cost. Financing a car is generally cheaper in the long run compared to leasing, especially if you intend to keep the car for a very long time. Leasing cars can be cheaper in the short term, but you'll always have a car payment. If you financed a car, you will eventually pay it off and own it outright. However, there are some potential drawbacks. First, when you buy a car and finance it, you're gonna have higher monthly payments. Loan payments are usually higher than lease payments because you're paying off the entire purchase price of the car, not just the depreciation. Also, maintenance costs are gonna be a lot more because, well, once it comes out of warranty, you're gonna be responsible for maintenance and all the repairs. Also, you have depreciation. Cars do depreciate over time. Some models lose value faster than others. When you finance, the risk of depreciation is on you. When the time comes to sell or trade it in, you might not get as much money as you expected. Now, let me just throw it out there that leasing really makes sense when you're buying a high-end truck or luxury car that depreciates like a stock market crash. Also, if you get in an accident, well, you don't have to worry about diminished value because, well, with leases, you just get it fixed and then turn it back in. And because you have lower monthly payments with a lease, you'll have more cash liquid if you want to invest in something. So, for me, well, it made more financial sense to buy and finance a new daily driver. And you can learn exactly how I did it in my new free workshop I'll link down in the description below. I also like buying cars using financing and making money using them, which that workshop will cover as well. Also, I'm Brad, this is Ideal, and please like, subscribe, and turn on that notification bell, and check out this Idealist video up here, or whatever YouTube recommends you watch down here. And promise me one thing, let's get rich together and keep living the ideal lifestyle.